Hello, this is Joe Harris with Morgan Financial. We just got word that the Fed has decided to raise their benchmark rate 75 basis points. This is actually a good thing for mortgage rates. See, the Fed has, from the beginning, or I should say the last couple of meetings, they've told people we're going to raise rates. And, until we get inflation under control, we're going to raise rates. And they had some projected outcomes of what that looks like. And they used very strong language. And going into this meeting, inflation was still high, but the effects and the worries that further pressure from the Fed was going to cause a recession started to take notice with people in the Fed. They're listening to these things. Their goal is to get inflation under control, but there's a lot of pressure to get inflation under control without stifling the economy and having a severe economic downturn. So what's going on, the reason why I said 75 basis point raise is actually a good thing is because it's already been baked into our interest rates. In other words, traders wanted to get ahead of that news, and if everyone thinks it's going to be 75 basis points, they reacted accordingly. So the interest rates we have now reflect that it was going to have a 75 basis point increase. So if we had a 100 basis point increase or we had a 50 basis point increase, the market would have reacted differently, right? But because it came as expected, that's already baked in. And I actually is watching the mortgage-backed security market right now. The rates look like they might get a little bit better because not just because of the 75 basis points, but the language the Fed Chair Powell said in his post meeting, what the language he used wasn't as harsh about future raises to the rate. So what that means is they're signaling that, look, instead of saying, we're going to keep raising and raising and raising, they signaled that, hey, look, we're going to look at what's going on in the market, what's going on with inflation to make the decision then. So he's already using easing language that makes markets a little bit more confident and comfortable that inflation is starting to get under control, and that there's not going to be all these future definite raises. Now, there certainly could be, but right now, they're easing up their language, and which makes the markets feel a lot more comfortable. You'll see the stock market go up today. You'll see rates get a little bit better, not very noticeable for those prices on the street. So all in all, this was a good day for mortgage interest rates, and it's a good day. Even though we had a 75 basis point hike, you're not going to see mortgage rates shoot up. So that is all good. Thank you for listening. If you have any questions, comments, or concerns, please give us a call anytime. Talk to you soon.